What's going on, guys? It's Aiden again, back with another educational video. And for this video, we're going to be going over our textbook setup at Aerial FX. What we absolutely love to see in the market. Again, nothing is certain, all right, which is why we always stress risk management, because at the end of the day, we are not in control of this market, okay? But it doesn't mean we can't have our favorable setups that we identify as more highly probable. All right, so this is the EURUSD, and it happened a few weeks ago. And what you can see is we're essentially accumulating price, creating very discrete lower lows and lower tops. Okay, and we had a spring. We had a very impulsive move that took out the structure. All right. So that is a very good sign. Okay, we'll do another video later on kind of Wyckoff and how we integrate that into smart money concepts. But we saw this move, and we're currently on the 45-minute time frame. And after this impulsive move, we saw that price created very equal lows. Right, and that's when you can start licking your chops, okay? Because we didn't buy here, all right? We didn't buy here at the double bottom like your mentors tell you to do, because we know that double bottoms are engineered liquidity. By that I mean engineered liquidity in terms of they know the liquidity providers understand that most people are taught to buy here and place their stop loss below the lows, or that they're taught to put their sell stops here. All right, so we have, in effect, engineered liquidity where they have created equal lows and created a significant pocket of money below these equal lows. All right, but this all comes with the understanding that we did accumulate in price and we did break some structure with an impulsive move that sprung to the upside. Okay, very good. So even after we got up here, we didn't stress out because we knew that there's liquidity here and we would like for that liquidity to be purged so then we could buy, right? Because the further away we get, the more in drawdown they are on their sell positions here. All right. Very good. So price obviously started making its way down. All right, and we had identified this on the 45-minute time frame because it's not easily identifiable on a higher time frame, the 1 hour. I believe this is just a big wick. But we saw this on the 45-minute time frame, and we put our buy limits at the open of this candle. Okay, open of that candle. Obviously, the close could be your stop loss, about 11 pip risk. All right, and if we go down up to a higher time frame for targets, this is where we targeted. Okay, so we're looking to buy here, and what we can see here is we have an imbalance in price. All right, we've gone over imbalances before, where there was no buying offered in this range. Okay, so we'd like to get that filled up. So this was our target, which you can see was met to perfection. All right, so it was an easy, essentially 1 to 6 trade. All right, but that's not only it. Okay, I'm gonna go ahead and actually I'll just leave that. I'll just leave that. All right. So, what did price do? All right, obviously, it hit our entry and we had minimal drawdown. What time? If you had watched my prior video, all right, let's see what time it was. 8 a.m., 8:45. Okay, it's probably easier to look at on the hourly time frame. Okay, so what did I talk about in terms of the openings of sessions, guys? That 3 to 4 a.m. London, and that 8 obviously to 9 New York where we can see that false move, quote unquote, when it's really not false, guys, because we know everything happens for a reason in this market. False move, let's just call it that. 8 a.m., 8 to 9. Then we get our swing to the upside. Okay? So, perfect. Time and price, correlation. Equal lows, 45-minute sponsor candle, take liquidity, mitigate, proper timing. Euro USD, 8 to 9 a.m., mitigate, moon. Okay, perfect. We're in that trade. All right, I'm going to go ahead and delete that. All right, we enter almost immediately into profit. All right, what happened though? What happened here? The market makers, the LPs, liquidity providers, had to pump money into the market to take out this liquidity to mitigate here. What does this make this candle at this time, 8 to 9 a.m.? Our sponsored candle. Sponsored candle. All right, so we're break even on this position. We make a unidirectional swing for the rest of the session. All right, we create our essentially Asian range. And then what happens, guys? What happens? London session comes around and the next day. 3 a.m. candle. 3 a.m. candle, guys. Mitigates out of the candle that mitigated. There you go. There's your second entry. Long. Stop loss below the low. Targeting the exact same imbalance that we targeted on the first position. So now you're break even on your first position and you are able to scale in because you're in profit, right? We like to add to winners, don't we? All right. Another easy 1 to 5. 1 to 6. So, just in that, where we've identified equal lows and a sponsored candle to take out equal lows, we knew we had to pump millions in the market to take out those equal lows. So the further we get away from here, the more in drawdown we get in on this candle, on the orders that are in this candle. So time and price correlation comes around 3 a.m. candle. Opening of London session. All right, they've received their instructions from the Asian trading desk. Hey, we need you to mitigate out of this position here. All right, we need you. There's so much liquidity. There's liquidity. This amount of liquidity in here. We need you to take, and then we need you to target up here and fill this imbalance of price. So right around the 8 to 9 a.m. New York session, we can fill the imbalance and continue with the actual overall trend. All right. So this candle actually was 7 to 8. All right. So obviously our 2 buy positions take profit to the T. All right. We take targets for a reason. So specific targets. And I identified this on the 4-hour time frame where we had this imbalance for a specific reason. Okay. Now what could we have done? I don't want to actually go out of this time frame, but obviously on the higher time frame we've been bearish. There's been no indication really that we have shifted significant trend on a higher time frame. So what happens? We have created equal highs here, essentially. Price, pump millions of dollars into the market to mitigate or to fill that imbalance, taking out these equal highs. Liquidity. What do? We bought to sell. All right, 7 to 8 a.m. All right, right before New York session starts, 8 to 9, we engulf. Really, that 9 o'clock candle, mitigate out, and we collapse. And obviously, we've collapsed essentially ever since. And obviously, guys, retail traders are taught, oh, trend line here. I don't even know where they would draw it. Right there. Oh, third touch on a trend line, we're going long again. No. All right, because we've identified from a higher time frame the overall trend as well as the 4-hour imbalance fill. We filled that imbalance, we engulfed right time of day. Okay, right time of day. We mitigate that first 15-minute candle of the 9 o'clock candle, right before New York, opening of New York, mitigate out, collapse, and we have fallen off the face of the earth ever since, guys. Let's go down here. Where could we have entered? Oh, retail traders. Come on, guys. I know you're here. Inverse head and shoulders, right? Broke the neckline. Let's retest it and go long. Probably place a buy limit right here. No. What happened? We just bought to sell. Up. Last candle. We have imbalance here. Mitigate to the T. What do we do in the process? Engineered liquidity. All right. We took out liquidity. Mitigated here with the spike. Euro news. There's your entry. No drawdown. 5-minute time frame. Come on, Wi-Fi. Come on. Come on. God, it's so slow, man. There we go. All right. What do we do? This was that candle we just identified on the 1-hour time frame, where we had engineered liquidity, equal highs, bought to sell. Billions or millions injected into the market. Boom. Time of day, 8:30. Guys, are you starting to see a pattern here? Buy, sell, mitigate, continue. Very simple. As long as we understand time and price. Obviously, we make it up here, and on a higher time frame, we mitigate out of this wick. All right, and just continue on. So those are all the entries you could have taken on the sell side before we've absolutely collapsed, guys. As well as the buy positions, our textbook setup that we took here. So we could have bought it here, obviously we did. And then all of these entries on the sell, stacking, because we're break even. All right? So understanding time and price, correlation. What time of day is it? What pair are you trading? Where are we looking to mitigate out of? Have we identified our areas of interest, our candles of interest, to be mitigated out of at the right time of day for the right pair and the right session? All right? So I'm hoping all of these things are starting to come together and come to fruition for you guys. We're here at Aerial Effects to kind of be the company or the mentors that we needed when we first started trading. We want to be that for you guys. All right. So value, take it, back test it, study it, learn it, apply it. All right. Very good. Have a good night, guys.